Well, good afternoon, everyone, and thank you for joining us for today's Manulife Business Success Series webinar on building your business through COVID-19 and beyond. My name is Art Sinkler, and I'm Vice President of the Greater Kitchener-Waterloo Chamber of Commerce. Before we get started, I would like to acknowledge that we live and work on the traditional territory of the natural, Anishinaabe, and Haudenosaunee peoples, and we seek a renewed relationship based on the foundation of mutual understanding and respect. Today's session would not be possible without the continued support of our sponsors. A special thank you to my title sponsor for the Business Success Series, Manulife, our platinum sponsor for the series, Immigration Partnership, and this month's presenting sponsor, RBC. These organizations are strongly committed to supporting our local economy and providing businesses with the resources and tools they need to thrive. Before the session starts, I'd like to go over a few quick reminders. Please ensure that your microphone is muted throughout the presentation so we can reduce any background noise. And if you have any questions, you can enter them in the question box in your central control panel at any time. If any are tech related, a representative of our organization will respond momentarily. If any of the questions are for a panelist, they will be gathered throughout the session and our moderator will do her best to answer as many as possible. All attendees will be sent a recording of today's discussion, which will also be available on the Greater KW Chamber website. I would now like to invite David Parsons, Commercial Account Manager with RBC, to introduce our speakers for this afternoon. David?
Thank you, Art. RBC is proud to be this month's presenting sponsor of the Business Success Series. I have the privilege of introducing today's speaker panel. Kevin Ballantyne is passionate about helping small and medium-sized businesses improve their cash flow and increase profits while guiding business owners to freedom and financial literacy. He does this through Grant Thornton LLP's senior financial support and advisory services. Kevin brings more than 3 decades of professional financial experience with many different industries. In addition to being a chartered professional accountant, Kevin is also a certified business exit consultant, where he works with business owners to plan their transition out of their business in the way that best meets their goals. To help business leaders and owners improve their financial literacy, Kevin also provides a course called Finance for the Non-Financial Leader. The second panelist is Debra Wishart. She is a senior commercial account manager with RBC Royal Bank. Debra has 25 years of professional and business financial services experience, culminating in the Waterloo region, and 17 years of supporting and delivering to small businesses, commercial financial services in a relationship-based approach. The last 5 years with a specialized commercial banking team, supporting nonprofit, diversified markets, knowledge-based industries, healthcare professionals, and franchises. Debra delivers value-added financial advice and solutions that are tailored to business clients in collaboration with RBC and partners, and provide support strategies to new and existing businesses with clients in areas of strategic planning, financial statement review, financial analysis, and financial analysis. Debra has demonstrated success with an advice-based methodology and supported by a network of RBC professionals. The third panelist is Luci Mihet, and he is an experienced senior account manager at Export Development Canada. Before starting with EDC, Luci was a commercial banker focusing on knowledge-based industries. Within his current role at EDC, Luci helps Canadian companies de-risk their international sales, access working capital, and helps businesses take advantage of global market opportunities by connecting them with international buyers and supply chains. Luci's chief responsibility is to help Canadian companies go, grow, and succeed in international markets. And our moderator today is Rebecca Schoenhardt. Rebecca is the Vice President of Commercial Financial Services for the Kitchener-Waterloo-Cambridge market. In this role, she leads a best-in-class commercial team to maximize RBC's position in the market and bring the best of RBC to businesses, business owners, and their employees. Since joining RBC, Rebecca has held various roles with private client credit U.S. wealth management in New York, international institutional sales global asset management in Toronto, strategy with Global Wealth Services in Toronto, and our global trust business in the Caribbean, and the Enterprise Strategic Client Group in Toronto and London. Rebecca holds an MBA with Schulich School of Business and is a CFA charter holder. Please welcome Rebecca, and thank you.
Thank you so much, David, and thank you, KW Chamber, for inviting us here today. I am really looking forward to this conversation and our prep work and getting to know Kevin and Luci and Debra more. I think we've got 3 really interesting perspectives on a juicy topic for the day, and so I'm hopeful that you'll get a lot out of it. There is a chat box within this, so while you're all muted, you can, in fact, flip in some questions there. I've got it open here, so I should be able for our auditors here on the phone, put in your questions and I'll be able to direct that to the right speaker. But let's kick off here maybe with you, Luci. That, you know, as we've had this year, unprecedented year now, 13 months of COVID, and this is the new operating normal, unfortunately. And so what would your advice be and key considerations for business owners operating in this unfortunate new normal?
Hello, Rebecca, and thanks for the question, and it's a pleasure to have the opportunity to discuss this important topic today. You know, in the context of the COVID crisis, companies have faced and continue to face critical challenges. And as the COVID pandemic continues to affect Canada's economy, businesses are looking for ways to survive the crisis and get ready for the recovery. And it's important to note that a year ago, we saw the Canadian economy decline by a record of almost 50% during the span of a month. And as of March of this year, we're sitting at 15% below pre-pandemic levels. And so what this means for me is that during the past 11 months, Canadian companies have been tremendously resilient and have accessed the variety of government programs that have been made available to them. And I think business owners have done a very good job managing through the pandemic thus far, but they need to keep in mind that many of these programs have an expiry date, and we are certainly not out of the woods yet. And so my advice for business owners is to ensure that you are fully aware of the government programs made available and when they expire. You can find this information through banks' websites, EDC's own website, chamber resources, but for me, probably the most comprehensive site I've come across is ISED's, that's Innovation, Science, and Economic Development's website. And if you type into Google search ISED Business Benefit Finding and click on the first link, it's going to lead you to a site where you're asked a series of questions, and based on the answers you provide, you will know which programs you're available for. And so take the next few weeks to ensure that you don't miss out on any of these programs, because I'm still having conversations in my capacity with business owners that are not aware of the programs that are available to them.
That's great, Luci, and that's a great tip. Perhaps Jenna or Saba, who are helping us on the backside of this from KW Chamber, if either of you women are able to find that link, perhaps you could post it in the chat so that our attendees can grab it straight away. Debra, let's turn it over to your floor. From a commercial banking perspective, what are some key things for business owners to keep top of mind in the current environment?
So thank you. Pleasure speaking on behalf of Royal Bank and our commercial team. Certainly to Luci's point, and certainly a big part of our support to our business clients is around reporting and forecasting. You know, there are some fantastic programs that we facilitate alongside with BDC and EDC out there, including wage subsidies. But I would say in general, through this financial impact that the COVID shutdowns have entailed on all of us, it certainly requires both careful attention to reporting and forecasting, not only during this time, but certainly as a post-COVID recovery plan. to understand, and certainly some of the things that we're looking at as a part of supporting commercial clients and business clients is really understanding your business in a COVID environment, and you should really understand operational impact. That's huge in terms of your supply chain viability and workforce availability. Liquidity, again, huge in terms of reporting and forecasting, and understanding your ability to meet current and future obligations. And these are some of the areas that the programs do provide some support. But again, it's really fundamental to have a grasp of the cash flow projections in line with some of the key assumptions and impact in your industry. And also, I would say actions you can take as a shareholder or business owner in terms of internal controls, very key. So again, reporting and forecasting really demonstrates effective cash management, especially when you're looking for bank support or government programs. It is a true analysis of your company's working capital requirements, and certainly helps us to understand with you what cash flow funding and sources can be available to optimize that.
I love it. So pulling it together, that story that Luci's speaking about, the resiliency we're seeing in the business community, but also there's a variety of programs available to support, tying that in with your suggestion of having a real tailored view and a forward view as to what those needs are going to look like up and down your supply chain. And Kevin, I think you might be the man to tie this all together for us. You know, where could you be of help with business owners and providing them with advice in this current operating environment?
Well, what I tell my clients and even my students in the finance course that I teach is that it's important to get a good understanding of the numbers of their business. In this COVID environment, and always, too often I see business owners having insufficient and inaccurate information to run their business. The single column of numbers that their bookkeeper produced quite often is different than what the year-end accountant produces, and it's really not a good way to run the business. So Debra mentioned the importance of having forecasts, and I echo that as well. But quite often businesses don't have forecasts unless the bank is asking for it, and then that's kind of the extent of it. They just produce it for the bank and put it back on the shelf. But it really should be a working document that they're working with all the time, and they should have a good sense of where they're going for the next 12 months or more, so that they know what their cash needs and what their borrowing needs are. And too often I see growing companies, or sometimes they're even declining, but then they get themselves in big trouble later on because they don't look into the future. They're only looking at the bank account as it stands today. And of course, it's important to take advantage of the government programs that Luci had mentioned as well. One of the areas I think it's important is cash overall, that they should be tracking and taking steps to improve their cash flow. And one of the things that they should be doing is measuring their cash conversion cycle. Now, you may not have heard what that is, so I'll define what that means. It's the number of days that it takes you to collect your receivables, plus the number of days of inventory you have on hand, minus the number of days you take to pay your payables. So that's your total cash conversion cycle. And the lower the number, the better. Typical small businesses, they often have a cash conversion cycle of about 75 days. But if you look at the annual reports of some large corporations, they've got it down to a science. So if you look at Walmart, for instance, their cash conversion cycle is 2 days. And if you look at Amazon, their cash conversion cycle is negative 32 days. So it basically means that they're using other people's money to fund and grow their business. And ultimately, all businesses should be working on trying to get their cash conversion cycle down. Yeah.
Thank you, Kevin, and I'm sorry about my telephone call there. You know, two things struck me from what you were saying. The first component, the importance of forecast. I was imagining, or forecasting, I was imagining a business owner, you're in the car and all you have is the headlights. So all you know is a couple of meters in front of you. But with the forecast, that's suddenly having all the street lights turned on and you can see several blocks ahead and take adjustments accordingly. And then the other component there of just how important it is to understand what is your cash position and how, and with, you know, what are the levers available to you to ensure that you've got that cash conversion cycle as tight as it needs to be. So, you know, we've just, I don't think the word is celebrated, we've passed COVID's first anniversary, and we're starting to see some trends emerge as we look a little bit in the forward view here. And so, Kevin, maybe we'll continue here with you. What are you seeing as emerging trends in business owners through COVID?
Well, obviously, COVID's been a dramatic economic and social disruptor. And I see more than ever that business owners are looking for advice. They need help for survival and for restoring the value of their business. It is important to remember that in good economies conceal risk, but bad economies reveal risk. And it's important because business value is a function of both risk and return. Both lowering the risk and increasing the return need to be considered when growing the value of the business. Most business owners think about increasing sales and they expect their profits to follow at some point. But they tend not to think about lowering the risk in their business. And consider too that 42% of business owners are baby boomers. And that means they're over 58 years old. These owners have gone through 3 or 4 economic shocks, including COVID, since they started their business. And they are getting tired of these ups and downs. And they are also seeing that the majority of their wealth is in their illiquid business. They're starting to realize that they need to start planning their transition out of their business. The problem is that most don't realize that there's more to preparing for that exit or that transition out of the business than just doing tax planning and restructuring. Businesses aren't as easy to sell as houses are. And in fact, according to the International Business Brokers Association, up to 90% of businesses never sell. Even those that do sell, 75% of the owners aren't happy after the sale. So this is where it is very important to get the proper advice on increasing the value and saleability of the business, and properly plan the transition out of the business and implement that plan so that the owner receives the needed after-tax and after-fees amount they need to fund their retirement. For many owners, they see that their family wealth is at jeopardy. And business owners will typically tell you that their family comes first, but their business comes a close second, along with the people that work for them. In Michael Gerber's book called E-Myth Revisited, he says that owners need to spend more time working on their business and less time working in their business. And I think the year 2020 has helped to remind owners the importance of doing that. And this working on the business includes increasing the value of the business and planning the transition out of the business. And to do that properly, business owners should be thinking about doing it 3 to 5 years before they plan to exit, but keeping in mind that sometimes the unexpected happens as well.
Right, Kevin, that's some really good advice that you've provided. It's COVID hasn't been much fun. And to be a business owner through this, you know, I can see people deciding maybe it's time to cash out. You know, this is as good a place to exit as any. But, you know, it's also something to recognize that this isn't a decision that can be made quick or actioned very quickly. And so to have that strategic planning well ahead of time, so as to be able to enact on a plan effectively. And Debra, I'm wondering, from your position as a commercial banker, what your thoughts would be on that, if you're seeing any trends within your clients of exits, whether those be you know, selling the business or acquiring another one, and what you can do to be of help there.
I would certainly echo Kevin on that, and certainly, you know, the pandemic has created some different nuances, and I would say a little bit more focus and time during that standstill still to focus on those type of conversations. And I would say that planning ahead certainly protects the business that business owners have worked so hard to build. And in order to do that with professionals and trusted advisors, you can certainly make those decisions in advance. Business owners, I would say, are much more than their business alone. Whether they're business owners, you know, when they're looking to acquire, sell, retire, transition, business owners need to definitely look for advice beyond how to run the day-to-day. And this is where we would certainly have conversations around business owner planning. And it's recommended that business owners explore a broader business owner advice as it pertains to structure, transition, as Kevin said, you know, planning for retirement, growth, acquisition. I'm seeing a lot of that. I would say as a part of RBC's relationship approach, we would certainly include our specialized wealth management team. And really the focus is on managing business and personal assets separately and efficiently, because again, there is the importance and emphasis on that, and certainly preserving surpluses, designing a plan for any sort of transition. To Kevin's point, you know, 3 to 4 years in advance, sometimes even more. You know, and very important. And some of the areas that we also touch on is employee, you know, aspects of how that gets included in the planning, because, you know, a lot of value for businesses are their employees as well.
That's great. Thanks, Debra. Because you don't often think of about being able to provide sort of that advice or perspective on it. So it's helpful to hear that we could. Luci, we also don't often hear about EDC doing more than straight plain vanilla export. But in prepping for this call, and we talked about some of the support that EDC could provide either in a strategic exit or being a purchaser of that business owner exiting. And so I'm going to pass it over to you to share more.
Yeah, so from my perspective at EDC, we've certainly seen an increase in mergers and acquisitions, both domestically and internationally. And we've helped Canadian companies access capital to make acquisitions. And in fact, Debra and I are working on a deal right now. And so our preference is to work with your financial institution to share the risk with them when they deploy the capital to purchase or acquire the business. And so in some cases, especially when acquiring foreign businesses, we are able to provide your financial institution a guarantee of up to 100% against the loan so that you can essentially access the capital you need for that acquisition. I would say from a trends perspective, though, the most significant trend that I've seen has been a shift in conversations from managing the risks that emerged from the crisis to looking for opportunities for growth. And so although I'm still having conversations with businesses about the programs available to manage through the COVID pandemic, the vast majority of my conversations have now shifted to helping Canadian companies grow out of this pandemic. For example, I've recently worked with a local company that was looking to purchase a piece of equipment from India to increase their productivity. and they were asked to pay for the equipment before the Indian company would ship it. And so we're helping de-risk this transaction for the Canadian company by offering something called advanced payment insurance, whereby EDC does its due diligence on the Indian company, and we reimburse the Canadian company 90% of the advanced payment should the Indian company not ship the equipment. And so again, my conversations today are centered more about growth and problem solving these types of situations than navigating the COVID crisis through the support programs.
I love that's a good reminder there, Luci, that and it isn't all gray skies and clouds. For there are a lot of business owners that are looking at capturing the opportunity here and have pivoted into new lines of product or service so as to capture the market opportunity that this represents. And keeping with that theme, it's been in some of the headlines about how, hey, with the prospect of vaccines coming down the pike, that we're going to experience the 1920s roaring 20s redux in the year 2021 or 2022. And so with that comes threats of inflation and rising interest rates, of course. And so, that as a business owner can provide some opportunities, but also threats. And so, Luci, how would you suggest that business owners position themselves to best be oriented for that potential of our next roaring 20?
Yes, so I've heard the chatter and read some articles that touch on this. And as I mentioned before, 11 months ago, our economic activity decreased by almost 50%, and we've made up about 35% to date. And so many economists are predicting stronger growth in the coming years. The truth is that the Canadian share of global GDP is about 1.39%. And so what that means is that over 98% of global growth is coming from outside of Canada. And so governments across the world have gone all in and deployed massive amounts of capital to save their economies. And now we're looking to spur growth. And so Canadian companies can look outside of Canada to participate in this growth to a larger extent. And EDC will focus on the risks so that your company can focus on growing your business. And we do this by making sure that you have access to the necessary capital to grow outside your markets. We do this by ensuring that you get paid even if your international customer doesn't pay you, by offering accounts receivable insurance. We can help by providing loans to your international buyers so that they themselves have the capital to purchase products from you. And lastly, we make sure that you have access to financial instruments like letters of credit and foreign exchange facilities without the need to encumber your working capital. And so my ultimate advice is to put together an export plan to identify the opportunities of participating in the global growth, and EDC, your bank, and your accountant, in my view, can help in this regard.
That is good advice, Luci. There's lots of opportunity out there outside of our local market, and it's good to be reminded of that. And I know EDC, you're a big participant in the Trade Accelerator program that our own KW Chamber hosts, right? So clients client members of KW Chamber can sign up for that and receive expert advice from you and others as to how to develop that export plan. So if they're thinking, okay, what's Luci saying about that export plan? We've got a tool available to help them. That's great to know.
That's correct.
Debra, what advice would you be presenting to clients to position them for this brave new world of market opportunity when we get more and more Canadians vaccinated?
I certainly would say, to Luci's point, is, as you expand cross-border, keep EDC, your bank, RBC, and your accountant very close. a lot of things that we're seeing really and truly, and I know we've experienced this as an organization, is technology. Technology is certainly disrupting business every day. Everything from customer expectations to business models to entire industries. And one of the things that this poses is the question is how businesses are preparing themselves in light of technology. Are they getting up to date? Are they researching, embracing some of the conversations around it? Or are they setting themselves up for potentially the risk of falling behind? So I would say certainly in a big part of my role in commercial banking is speaking around digital technology and how it can support your business as we're changing the way we operate and interact with customers every day. So certainly rethinking internal controls, that correlates with cash management. We talked about cash flow. And really can assist in saving time and money and reducing expenses associated with outdated processes. I would also say leveraging not only with your bank, but certainly through your accountant and other forms of technology that are available there that help you become more efficient with cross-border, global, international accounts payable, receivable methods. So certainly great support there in terms of wires, etc. But the biggest thing I would say is these are all important avenues to explore, especially when you are looking to access debt and future growth, leveraging a good plan there with the support of your trusted advisors really helps to explore with the bank and government programs ways to support you along the way.
That's some really good advice, Debra. And when you talk, that's the future is digital and it's this increasing level of technological sophistication. There's all sorts of tools that your bank or your advisors can help furnish you with as a business owner. But I'm wondering if we can double click on this a little bit, because one of the things, unfortunately, we're seeing a trend in COVID in our business is that the fraudsters are getting more technologically advanced as well. And the level of sophistication with email, phishing schemes and the like, we're seeing a real prevalence of that. And Debra, I'm wondering if that's something that you could speak to briefly here about, what are some real tangible ways that a business owner can avoid some of those pitfalls?
Absolutely. I know with some of our, I would say, accounts best in class, I would say accounts payable and reconciliation options within our bank. There are dual security options, security tokens. It really certainly drilling down on accessibility and processes. So, and it really makes owners own in, I would say, on dual controls and also certainly making sure that their systems are up to date as a part of fraud prevention. We have actually done some seminars with our clients as well in and around fraud management, cash controls, etc., because what we've seen is a lot more sophistication in that area. So definitely technology, understanding technology, and certainly working with your bank and your accountant in that area to really help with processes around security. IT is big too.
And I love it. And I know I've had the good fortune of being part of some of those seminars. And even if it's something as simple as reducing the amount of physical checks you're giving and receiving,
Yep.
so as to get more digital sophistication and controls in there is a good first step for any business owner. Okay, Kevin, coming back to you here with this theme of moving forward into the roaring 20s. What advice would you be giving the members around the phone here to trim their sails to best capture those wins?
Okay, well, we were just talking about technology and how you have to have security, but I think, too, it's good to get the right kind of advice when it comes to that. And we have a whole different arm for cybersecurity as well, that it's good to just have that assessed and to see where there are problems or gaps within your systems. But I think that the best way for businesses to position themselves for future growth is to make sure that they build a strong balance sheet. Most of the time they're thinking about income statement, but the balance sheet is very important for them. And that should be structured to support the company's goals, but also to maximize the financial performance of the company. This means having an optimum level of working capital, so that's current assets minus current liabilities, where there's a balance between liquidity and profitability. And it also means having a balanced mix of debt and equity funding, so that they're maximizing the return of capital that's being employed in their company. Talking about inflation, what I'm seeing is that there are certain things we're seeing big increases in the price of things. One example is lumber, where it was hovering around $200 to $500 per 1,000 board feet. Now we're seeing prices over $1,000 per 1,000 board feet. And commodity food prices, we're seeing up 35%. And the price of gas at the pump, we're also seeing that increase as well. So with these inflationary pressure building, the central bank usually counters with increased interest rates. We haven't seen that yet, and hopefully we don't see it for quite some time, but it's important to keep that in mind. And for business owners, this means the higher cost of capital for growing their business and the economy. It also means lowering the business valuation because of the higher cost of financing. When businesses change hands, there's usually some financing component. And what I'm finding is 95% of all businesses tend to grow to a certain plateau level. And that's either because the business is what's called a lifestyle business, meaning that it's the business is there to support the owner's lifestyle, or that they're trying to grow it, but they're getting outside of their own ability to get past that plateau level. And it's overcoming that plateau is typically the exception and not the rule. But it is possible, and usually possible only when they have the proper kind of advice. So advice from their banker, from EDC, and certainly from their accountant. Recessions of one sort or another usually come about every 10 years, and they typically last 18 to 24 months. And we've learned how to mitigate those recessions. So we've seen less impact from because of the government grants that are being issued. But at the same time, I think our country has more to learn when it comes to paying for these recessions. And even though the overall economy has managed to move ahead, there's still a lot of damage out there. And business owners are experiencing this disruption in different ways. One of the greatest impacts of COVID-19 is the reminder that our businesses are fragile and can quickly lose value and wealth. Business owners need to become well informed on how to grow their business and to do it in a way that the business becomes healthier and stronger and ready for any future downturn.
You've covered a lot of ground there, Kevin, but some really great nuggets. And thinking about some of those levers that are in play with inflationary pressures, and yet still Bank of Canada remains at that 25 basis points overnight, right? But also thinking about, from a strategic exit possibility, how those inflationary pressures or underlying base rates could impact the value of your business, and considerations to keep in mind there. That's really helpful. As we move towards, in the last sort of 10 minutes here, as we move towards the close, before I pass it to Kevin and Debra and Luci for their rapid fire summary, a reminder to those attendees on the call, you can type in your questions in the chat, and I'm happy to relay those to the relevant speaker. There is a comment here in the chat now from our friends at KW Chamber. So thank you, Saba and Jenna, for letting me know that we're going to share that link that Luci referenced when we distribute the recording of this email. So no need to go hunting for it now. But Luci, let's start with you. You're in the spotlight here. What would be your summary advice statement for members on the phone? What's the one thing you want them to be tracking with?
Yeah, for me, I'm going to keep it very simple. Have the courage to go global for growth. There's opportunities beyond our borders, and EDC, partnered with your financial institution, partnered with your accountant, can help businesses find it while protecting them from the risks. And that's it.
I love it. Export Development Bank of Canada, not surprising. There's some great advice and forward views there of the opportunity within with outside Canada's borders. That's really great. Kevin, what about you? From your position of expertise within Grant Thornton, what advice would you be having those listeners today track with?
Well, I think the big thing is don't try to do it on your own. Get the senior financial help that you need, and there's a lot of financial help business owners should be getting, and it is as affordable as they think. It is more affordable than they think, because they can start off as little as 1 hour a month, just having a chat and review where they're going and how to get there. We can help with better reporting, forecasting, growing their business, improving their cash flow, increasing profits, determining the estimated value of the business, and helping them to increase that value and get it more saleable. Plus, properly planning their transition out of their business. So there's a lot of help that can be reached out there, and that's my big thing. Just go out and get it. Yeah.
I love, and you make a good point there. It's sometimes we can be penny wise and pound foolish. The idea of paying for 1 hour of advice a month, that still is cheaper than not having the strategic advice, which ultimately reduces the end sale price of a business or reduces my availability as a business owner to get debt from my lending institution, etc. So thanks for that good reminder, Kevin, that you're actually positioned to be a real strategic advisor of business owners, not just the person who prepares the financial statements. Kevin, while we've got you here, I've got a question for you. What working capital solutions outside of the government support programs are you seeing some of your clients use so as to break through that plateau barrier you spoke about in business growth?
Well, working capital is talking about cash flow, basically, right? It's defined as current assets minus current liabilities. And there's all sorts of things that you can do. So I talked about cash conversion cycle. One of my past employers, what I did is I built a whole program around what we call DSO, days sales outstanding, and how to decrease those. And we were able to decrease them by 20% in 6 months. And that was both educational, helping them to understand what needs to be done to decrease that receivables and work in process. And also put a fun game involved too. So there was a bit of a competitive game against different business units against each other, and they could get a free lunch if they had the biggest improvement, right? So, but there's all sorts of things that way. And then when it comes to growing your business, there's many different things that can be done as well. Can be, well, there's growing the sales which would look at, you know, getting a clear picture of who your target market is, and also what's differentiating you, and being able to properly communicate that to your target market. So I could go on forever on this part, but but then there's increasing the value. I've got a very cool business health check that goes in and looks at 18 different drivers of the business, comes up with an estimated value of that business, and then we have all the different tasks that can be done to increase that value. So a lot of it, a good example would be where the business is quite often very dependent on the owner. Well, let's work at getting it so it's less dependent on that owner. And that's whether you're planning a transition or not, because that's a lot of stress on the owner that they'd like to see less of, and be able to enjoy more of being more strategic about growing their business and not just into the weeds every day, right?
That's helpful, Kevin. And it sounds like we've just scratched the surface of a very broad conversation with lots of specifics there. Mm-hmm. So one last summary point here from Debra. What would you have the members on the line be tracking with before we say goodbye?
Well, we talked about many things, disruptors, the COVID environment, we talked about inflation, and what I would say we've all touched on is the unpredictability of the current world climate and as it relates to businesses. And what I would say is proactive planning is very key, whether it's with, you know, your bank, your accountant, you know, other avenues such as BDC, exploring those options, because being proactive is certainly a forward-thinking plan rather than being proactive, and I would say really positions you more effectively as we are continuing to experience change. To echo Kevin, assembling a team of trusted partners, certainly the bank and other external partners, because you're really leveraging skills and experience outside of yourself. You know, certainly internally is great, but you're able to leverage financial, technical people, operational support, and also leveraging the business outlook, understanding your industry. Aligning all of this really positions you to really do better without no plan.
I love it. So it's trying to get that higher level view, strategic foresight around the business, and to bring in the right partners, whether it's EDC or your accountant or your bank, to help with that planning. That's really helpful. Thank you, Debra. So I think with that, we're just about out of time here. So thank you to the three panelists for joining me for this conversation. And to the KW Chamber, thank you so much for inviting us. We've really enjoyed the opportunity here to connect with your membership, and would love to come back and do it again. Yes. With that, I'll pass it over to you, Art.
Well, thank you very much, Rebecca. And I'd just like to repeat something that Kevin said towards the end of the panel discussion today. You said something along the line of don't do it on your own. And I think that's excellent advice. I think as a Chamber of Commerce here locally and chambers across Canada have been saying the same to our members. There's plenty of resources available. These are difficult times for business. But there are plenty of resources out there in every community to assist businesses with getting through that. So again, thank you, Rebecca, for sharing, and Kevin and Debra and Luci for providing your advice on how to get through this pandemic. You know, hopefully, as the Premier says, that light is there at the end of the tunnel, and we're getting closer. We're getting closer. Yeah. So again, thank you to everybody for your support today. Thank you as well, again, to our title sponsor of the series, Manulife, our platinum sponsor, Immigration Partnership, and this month's presenting sponsor, RBC. And finally, thank you to all of our members and others that have participated in the webinar today. As a reminder, we host a new Business Success Series session every Wednesday at 1 p.m. Join us next week as we are joined by Learners LLP, that's a local law firm, for a session on privacy and employment law issues in the age of COVID. We hope to see you then, and for full details and registration, please visit greaterkwchamber.com. Please share this series with your colleagues. Join us every Wednesday afternoon for the next edition of the Greater Kitchener-Waterloo Chamber of Commerce Business Success Series, brought to you by Manulife, Immigration Partnership, and our presenting sponsor this month, RBC. Because if it's Wednesday, it's the Business Success Series. Have a great weekend, everyone, and we'll see you shortly.